Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A decline of around 0.3%. We're seeing the Hang Seng that's opened up in trade today with a gain of 0.5%.
I have a deal with India, possibly, and that's going to be a different kind of a deal.
The stock that I'm going to be looking at is Vedanta. You know, it's been holding and protecting that 20 DMA for the last many trading sessions.
So the implied open was spot on because we've started 50 points higher. Nifty closing in on 25,600 now.
Moving Apollo Healthcare as well as the telehealth business into the new company.
We have a festive season coming as well. We are starting to see some momentum in the rural segment.
Our grinding slightly lower, Sonal. We're heading into the weekly expiry tomorrow, but this potential trade deal between India and the US is proving out to be a bit of a sore point.
There is a pressure built up not just on the clients, but the pressure is also built up on Dreamfolks as well.
140-point cut is what we are witnessing on the Nifty currently.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. For the markets, we've given up all our early gains. So the Nifty is now slipped to levels of 25,400. After opening flat this morning, markets have headed down through the course of the day. Pressure is visible across sectors, but it's the Nifty Bank which is underperforming quite sharply. The Nifty PSU Bank has also snapped its 6-day winning streak. So looking at some of the top Nifty losers, we're tracking sharp cuts across Shriram Finance, IndusInd Bank, and we'll talk more about the Goldman Sachs downgrade on that. But a Bajaj Finserv, Bajaj Finance, all dragging the financial space lower. On the flip side, metals are bucking the trend. The Nifty Metal Index is up close to about 1%, so that's going strong. Look at a Tata Steel, a JSW Steel leading the charge. The Nifty IT Index has cooled off. There was an intraday gain of close to about 1.5% on Nifty IT earlier in the session, but now that index is absolutely flat. And, you know, there appears to be some rotation in stocks where, you know, there is some bad news. The stocks have underperformed. Pull up something like an Asian Paints. Now, Asian Paints is now up close to about 1.5%. From the intraday low, it's recovered nearly 3%. So despite the negative news about the CCI probe on anti-competitive practices, Asian Paints has completely shrugged off that negative news. The other one is Maruti Suzuki. Maruti Suzuki is also higher by more than about 1%. Earlier, there was the news about, in the morning we were talking about how the auto sales numbers for Maruti Suzuki had disappointed the street. But on the flip side, there was also the production data that has come through. So Maruti Suzuki is up close to about 1%. So that's tracking at least the large cap action. We'll talk more about the mid caps, individual stocks like Tata Communication, Dreamfolks. But how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh, you were calling for consolidation. It's slipped a bit. Is it still within the consolidation band, or are you starting to get worried? And are there any fresh positions one can take on the Nifty now?
Yeah, I think, we are still in that band. I think now we are heading towards the lower range of the band. I actually talked about 25,400 as the first target. You're practically there. And in case you break below that, a good chance that we might see 25,200 being tested. Yet, I think, the rally which started from sub 24,700 will still be in flows. So, I think getting to 25,400 means that we'll wait for some reversal on the half-an-hour chart. In case we get it, then I think, we'll take this as the short-term low. And on the upside, we might retest 25,700. So, the overall bias is positive. But in the near term, I think the immediate move is on the negative side.
Okay, Nifty can head to levels of 25,400. What about the Nifty Bank? It did well last week, but now it's retracing a bit.
See, same with Nifty Bank. I think both the indices have a very similar kind of chart pattern. For the Nifty Bank, the corresponding support level is slightly lower. 56,600 to about 56,550. So as long as you're above that, I think it should be okay.
What about your stock calls for the last hour?
Yeah. So on the stock side also, what we've done is that we've taken some short position because we've been trading with mainly long buys. So on the stock side, I have one buy and one sell. On the buying side is GMR Airport, which is a buy with a stop below 86 for targets of around 92 to about 93 on the upside. And on the negative side, I have a sell on Hindustan Zinc. We'll keep a very tight stop over here, about 454, and look for a target of around 435.
Got that. Thank you very much for that. Moving on to Dreamfolks Services. That is under pressure after certain programs for Axis Bank and ICICI Bank were closed. The management did call out that this is going to have a material impact on the financials. We had a chat with the management. Vinny joins in to tell us the news and what the key takeaways were from the management interaction. Vinny?
Yes, so yeah, absolutely. There's an important news that is coming for the company. Now, obviously, certain programs, that is for Axis Bank and ICICI Bank, have been closed with effect from 1st July 2025. Now, banks accounts for a lot of a portion of the lounge services that they have in tie-up with other clients, and banks are a large amount of their clients. So, big banks like this surely will impact them. The company had said that there is going to be some material impact of this, certain programs closing down by these two banks on the company's financials. The exact amount is not something that they have mentioned so far. But what the company highlighted, and what we should note also, that 93% of the services actually comes from lounge services. So it's a huge portion of the revenue actually is driven by lounge services. Now the management said that, this cancellation that actually came in for Axis Bank and ICICI Bank from both these clients was just a few hours before this cancellation actually took effect, that they were informed about this, and then they informed the stock exchanges. Other than that, they had no information that this was going to be actually happening. They highlighted the major reason for this is that two major airport operators are there who have entered into the business in the last couple of years, and they have been causing a lot of pressure on this. So airport operators are putting pressure on the clients as well, is what the management was saying. And especially ICICI Bank, Axis Bank, like these big clients, is where the pressure is coming in from these other two operators, is what the company is highlighting. They also said that the client had to move from the company's lounge program to other operator program because of this pressure that came in. And currently, do not forget, 70 plus lounge services that are there across the country. 35 to 40% of these lounge services are operated by these two major operators. So that's a big concern that comes in, and we could see some bit of an impact of that financial impact on Dreamfolks. And revenue driver mainly for the company's lounge services, though they spoke about diversification to other segments as well, but right now it only accounts for 7% of their revenue contribution. So will be important to see in terms of diversification, but concerns and pressure coming in from competition was the key highlight that we picked up today.
Okay, in fact, a good time then to listen into what the management had to say in an exclusive interaction with CNBC-TV18.
It was a pressure which was getting built up to the clients. Okay, it was a pressure tactics which were done. So to be very upfront, it is mainly done by these two major airport operators who have now started getting into the similar business. The pressure which has been built up is to, tell the clients that, in case if they do not sign up with them or do business with them directly, they would actually stop their cardholder access to their airports. So this is a pressure which has been built up, and these are the reasons that why these clients had to move. But let me tell you that our contracts are still in place. It is not that we were just managing the lounge program. Just the airport lounges. There are other services also which Dreamfolks provides to these clients. Secondly, also to mention that, there are around 70 plus lounges in India. However, these operators, the airport operators who are trying to get into this business, are holding around 35 to 40% of the lounges only. It was just on 30th late evening wherein we got this information that, yes, there's going to be a migration, and that's the only reason. So I think we are following the compliances, and I'm very clear that, I would not want to give a wrong narrative to the market. Contracts are not shut. The contracts are still on. Okay. Today also, if you actually look at it, the ICICI program is still live on our platform.
Okay, that is a big story. Ashish Chaturmutha, MD Fund Manager, PMS at JM Financial, is now with us. Ashish, by any chance, have you been following the development in the stock price action at Dreamfolks, and what would your thoughts be?
Good afternoon, Rima. So, as far as Dreamfolks is concerned, we don't have this stock in our portfolio, but definitely we have been tracking this space closely, and we believe that there is a huge amount of competition and kind of pressure, obviously because of the private authorities which are now running the airports, and now we are seeing a new IPO which is also going to come in next couple of days, and it is also running a lot of restaurants and lounges in the airport. So we need to see, we need to closely watch this development, but definitely from a shorter term perspective, it's a little negative. And those holding the stock, I think there's going to be a lot more pressure in the stock in coming few days and months.
Okay, got that. What about what about the entire automotive space and the kind of June data that we've got for the monthly sales? Things are still very tepid, especially on the passenger vehicle side. And considering that the base was favorable last year, same time was also the central election. So things had slowed down last year. So despite that, year on year things are weakening. What if things don't pick up in the festive season? Now all hopes are being baked in the second half of the year that things will improve in the festive season. But what if that doesn't play out?
No, definitely. So, as you rightly pointed out, there's a lot of pressure on the auto numbers and particularly into the PV segment. We believe that the more pressure is going to be seen in the entry level, vehicles. Now, only silver lining is that if we are going to see better monsoon, so obviously the rural demand might start pick up, and if that happens, then I think within the tractor segment can do really well, and that's where we feel that Mahindra has good exposure. So I think that this is one stock which could be big beneficiary of the rural economy recovery which is going to be witnessed. Along with that, we think that whatever tax incentives which we got into the budget, that's also going to get reflected into coming few quarters, and this will lead to some amount of spending power in the hands of consumers. So this will be this data need to be watched very closely. But my sense is that whatever downside we had seen in the last couple of months in the auto numbers, it looks like we are in the process of bottoming out. But one has to be very careful about which stock and which segment one need to focus. So we are very positive on the little high-end segment. For example, companies like Eicher Motors would be beneficiary of the broader trend which we are witnessing in the urban economy. But from a rural economy perspective, I think tractor is a segment which looks promising, and from that perspective, Mahindra should do very well.
M&M's both automotive and the tractor segment did very well in the month of June. Tractor especially surpassing expectations. The stock today is on the flatter side, just down close to about 0.5%. But then it's had a great run up over the last 2 or 3 years. IndusInd Bank is the other one that we're tracking. Shares are under pressure. This is after a Goldman Sachs downgrade. So what is it that makes Goldman Sachs cautious on IndusInd Bank at these levels? Vamakshi joins in with the details.
Well, Rima, Goldman Sachs has downgraded the stock to a sell. They've got a target price of 722 rupees per share, and they say that this is because the franchise overall looks structurally weaker. The ROAs are also expected to reset lower. Now, what they also highlight is that the bank is likely to have a very weak growth trajectory as well as return trajectory going forward, even post normalization of most of the issues by the second half of FY26 as well as 27, and resultantly they've gone ahead and cut their EPS estimates by 25% for FY26 and 17% for FY27. They believe that this cut reflects likely persistent pressure on the margin profile amid a weaker yield trajectory as well as elevated funding cost for the bank. Now, what they've also said on valuations is that they are likely to stay below book on poor visibility of the turnaround. So therefore, they've gone ahead, downgraded their rating. The stock resultantly under pressure today.
Okay, thank you very much for that. Surabhi and Nigel are also here with us, with me for the last 50 minutes of trade. Hi,
we were hoping, Rima single-handedly would pull the market higher back into green territory, but I think it's a bit of a tough order.
It's tough now. Yeah.
But yeah, it's slightly disappointing. I mean, considering
to come back to the studio.
The bank nifty playing spoil sport down 1%. So yeah, for the Bulls, slightly disappointing afternoon.
Well, that's right. I believe both the batsmen are at the crease. I'm just the runner. But anyway, let's focus on a couple of stocks then. And let's focus on the index, that's holding one end up. And Ashish, I would like your view on the metals pack. Now, that index is actually doing a relative outperformance in today's trading session. And during, after an hour of trade, you suddenly saw it spurt to the high point of the day. There are a few factors that are playing out. Now, there is a hope that, in fact, we'll see some kind of a stimulus that will come in China. That's going to be interesting because the official manufacturing PMI data, though it continues to remain in contraction mode, which means that it's sub 50, it improved actually from the month of May. But there are some hopes that there could be some stimulus in China. Point number one. Point number two is there are some unconfirmed reports, as has been the case in the last many months, that there'll be further production cuts. We'll have to see how that comes about, quantum and various other details on that front, because year to date, as it is, Chinese production actually is down. The problem is that demand has been even weaker, and the exports continue to remain elevated, which is putting pressure on global pricing. But a production cut in China will be great news because that's what will result in a shortage of supply in the market, which in turn will support prices, which have corrected quite a large extent to sub $500 on a per ton basis. There's another factor that's playing out. There's some optimism that President Trump comes to the table, gets some deals going with various countries. That in turn will help, because it removes any kind of uncertainty with regard to demand, with regard to, how things will pan out from here on. And also, in addition to that, you have the dollar that's weakened, which is good news as well. And talking about the dollar weakness, when the dollar weakens, it's normally good news for base metals. So you have copper as well as aluminum prices. They're at the highest levels we have seen in the last 2 to around 3 months. So 4 factors playing out: stimulus, there could be some production cuts in China. Hopefully, Trump gets some deals going. And finally, base metal prices reacting to favorable dollar index. Ashish, what do you like from here? Ferrous, non-ferrous, and if you could name a stock, will be absolutely great.
Hi, Nigel. So yes, definitely, you have rightly mentioned some of the points. Apart from that, we believe that the fall in dollar index from 109 to almost 96, 97 zone is clearly, seeing a shift towards the entire commodity cycle. We are seeing both copper, aluminum, and not only this, we are seeing iron ore prices also going up significantly in the last couple of days, and we are seeing a very, very serious buying interest coming into it. There's an anti-dumping duty on steels, so which is also supportive for Indian, steel manufacturers, because there's a good amount of demand, and with the new anti-dumping duty, we are going to see some kind of, demand, the supply softening, and which will lead to some kind of price stability coming into steel prices, and this is ultimately going to benefit players like Tata Steel and Jindal Steel. But what we like is into the mid-cap space, which is stocks like Lloyd Metals. Lloyd Metals, because here, if you look at, they've got a new environmental clearance, and because of that, their current capacity, which is close to 10 million tons, is going to almost 26 million tons production. So I think, and with the steel prices also going up, this is going to be a big beneficiary for a stock like Lloyd Metal, which is more integrated player. So I think this is one stock. This is the only one stock which we are holding in our portfolios at this point of time, and we believe structurally, with this kind of production which we are going to witness, we can expect 30 to 40% kind of PAT growth for next 3 years time frame in the stock.
Okay, so that's a take on some of the metal names that are actually shining really bright in today's trading action. Tata Steel, JSW Steel, all of those stocks are right up on top. There is also some buying still evident in Maruti Suzuki, in Asian Paints, in Lever, some consumers plays, not necessarily pure FMCG, but other names as well, looking okay. Ashish, hi, good to have you on the show today. Paints, such a big, wide debate raging out there, whether after several bad years, finally should one start accumulating large paint stocks, or is there more pain ahead for paints? What do you think? Is the color green or red?
Good afternoon, Surbi. So I think, see, the kind of kind of competition we are going to witness in the space, it looks like one should clearly avoid the names like Asian Paints or maybe Bajaj Paints. The reason being, Grasim, the kind of capex they have done, almost 10,000 crore kind of capex which they are going to do, and which is almost completed. And if you look at one-time sales is what one can expect out of this capex number. So clearly, Grasim is going to see almost 9,500 to 10,000 crore kind of top line, which will make them number 3 player in the entire segment. So there's a huge, I would say, competitive intensity which is there. And for a space where we are not going to witness more than 15% kind of top line growth, and if the stocks are trading at 60 PE multiple, you will see a lot of pressure or consolidation which will continue in the space. So my sense is, if one has to really take a bet, I think Grasim is one stock which looks very promising. But as far as Asian Paints budget is concerned, I think they would trade more into a consolidation phase if there is no further downside. But I think in terms of upside also, it looks very, very restricted at this point of time.
Okay, all right, Ashish, appreciate you joining in. Thanks a lot for discussing all those stocks. We look forward to having a chat with you in the time to come. Well, by the way, keep an eye out on the Nifty. From the lows, actually, we have bounced a little bit. So that's pretty good news. I think a couple of stocks are fighting for the bulls. One such stock is Asian Paints, as we just pointed out. Wipro as well has cut its losses. So that's good news. And I think we have Maruti Suzuki that's now up 1.5%. So that as well is fighting in there for the bulls. So pretty good, looking screen in terms of those stocks. Just to highlight a few more names that are moving up. Flair Writing, that one is up close to around 5.5%. Volumes as well fairly decent. Sai Silk, we don't talk about the stock very often. I'm not sure whether there's a large trade, but that's one of the top gainers. And Bajaj Consumer, one of the biggest underperformers in the last few years. I'll tell you what, if you pull up a 1-month chart, you'll see that stock has given massive returns. There's a rejig at the top, 30% in a single month. So there are hopes pinned on the new person at the helm. But remember to tune into the all-new CNBC TV18 Prime. We bring you insights from policymakers, business leaders, economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the global reset, at 1 p.m. for the Big C, currencies, commodities, and currencies. In fact, cryptos, and in the global lens at 8:30 p.m.
Welcome back. Looking at the market as we get into the last half hour of today's trading session, and the color continues to be red. 1% lower on the bank Nifty. Nifty itself is down by about 0.5%. Nikhil Ranka is joining in this afternoon. He's from Nuvama Asset Management. Nikhil, good to have you on. So it's interesting, the market seems to be now figuring out what the next trigger is going to be, and I think soon enough it's going to be about earnings. Are you expecting any pockets of, upward surprises in Q1?
So good afternoon, Survi, and thanks for having me on the show. Honestly, if you look at it, this quarter could be a watershed quarter in that sense, because if you look at the key sectors in that sense, IT and banking put together will be 55-60% of the total Nifty earnings. In the case of IT, because there was tariff uncertainty in the month of April, a lot of decision making got delayed in that sense. And therefore, if you look at the initial consensus estimates, people are expecting 1.5-2% constant currency growth for Infosys. But if you look for other large cap names like HCL Tech, TCS, Telecom, people are expecting constant currency decline. So there will be subdued earnings from IT. And also, if you look at banking, we had almost 75 bips of repo rate cut in the last 3-4 months. And almost 40% of the book is linked to repo rate for most of the large banks in that sense. So, we will see a 15 to 25 bips NIM decline over the next 2 quarters for most of the banking names. And given the fact that loan growth has also slowed down, the system loan growth to close to 10%, the pre-provisioning profit growth will be very, very subdued for banking names. So what we are therefore looking at, the combination of the two put together, is single-digit earnings growth continuing for the next 2 quarters for Nifty names. And the consensus estimates, if you look at it, we ended FY25 at close to 1,010 rupees of EPS, and we are building in closer to 1140, 1150 rupees of EPS for FY26. So if the first 2 quarters are single-digit growth, then the asking rate for the next second half will become more like 16 to 20%, which looks very, very challenging. So my sense is the risk is more on the downgrade side for markets right now, and therefore the best case is that the markets consolidate at these levels. In our view, the upside is probably single-digit from these levels in Nifty over the next 6 to 9 months.
Okay, so best case is markets consolidate and see a single-digit kind of an up move. But what is the base case then, Nikhil? If we do see those earnings downgrades in the second half of the year, because consensus is still running a little high, what could be the extent of downgrades and even the extent of downside, say, on the index? Because some of the factors that you spoke about, say for banks, the NIM compression in H1, or the fact that system loan growth has slowed down is well documented. We've been talking about it. So isn't that not already in the price?
So Rima, if you look at it, we are right now at a number of closer to 1,300 rupees of FY27. And if you look at the last 8-10 year trading band of index, 19 to 20 times is the medium trading range of markets. So, even if we take 0 downgrades to earnings at 1,300 rupees of EPS, 26,200 becomes the upper end of the trading range. Now, if I'm building a 2-3% earnings downgrade to the 1,300 rupees of EPS that we are currently factoring in, and if we end up close to 1,250 rupees of EPS, then given the fact that you will have earnings downgrades, so, there could be lower multiples that could get assigned to market. You could probably have some sort of sell-off till 24,700, 24,800 levels. And then, probably we start building in FY28, 6-9 months down the line. And then the next leg of up move will come in. But right now, my sense is closer to 26,000 odd levels. A lot of positives start getting built in for the markets.
Okay, all right. Hi, Nikhil. Good to see you in. What about the pharma pack? It appeared to be a bit of making a comeback, but you're saying the second half of the year will be challenging. Tell us more.
So Nigel, if you look at it for most of the large cap pharma names where there was a US exposure, combined put together, Indian pharma companies would have done close to $1 billion of revenue from one single drug, which is Revlimid. Now, Revlimid goes off patent in Jan 2026, and a lot of the supply chain over there will start doing destocking from Q3 onwards. So whatever is the number that has to come will come in Q1, Q2, and then for the second half, there will be a very big void if you look at names like Dr. Reddy or Cadila, because they had very chunky contribution from Revlimid in their US earnings. So therefore, my sense is till the time we have some visibility of any other blockbuster drug from these companies, it's going to see earnings decline in FY26 and 27 for these names. At best, it could be a flattish EPS. And therefore, these stocks could have significant time correction from these levels. And therefore, I don't think, you can have even double-digit upside in these names from the current levels.
Nikhil, so given your cautious stance on the market, and of course, we're all awaiting to see if there's indeed that earnings recovery, what is it that you would advise taking exposure to right now? What would be, say, your top 2-3 themes or ideas?
So if you look at it, Telecom is one of the most defensive bets right now. If you look at it, we had a tariff hike 6-9 months back. A large part of that has got absorbed in the numbers. And my sense is, before we have a Jio IPO somewhere in second half of this financial year, there could be one more round of tariff hikes that might get contemplated. So if we have another tariff hike of say 15 to 20%, and if you look at the flow through to EBITDA, it's almost 70% that flows from revenue to EBITDA for telecom names, the incremental part of it in that sense. And IT is in that sense insulated from growth from a lot of the global turmoil in that sense. We don't know what will happen on 9 July when the tariffs finally get announced. But telecom is one sector which will be completely insulated even if there is some volatility around 9th of July in that sense. That is one space where I think there could still be double-digit returns that can be made over the next 12 months. So we are positive on telecom from the current levels.
IT in particular, Nikhil, I know you look at it very closely, which is why we ask you every time. But any stocks we should watch going into the earnings season where there is a mismatch versus expectations and what the company might deliver? From an earnings point of view, the stocks which are on your watch list from the tech SPAC.
So, Rima, I think Coforge is something that could prove out to be very interesting. If you look at the commentary of Q4 also, the management was extremely confident that in spite of the uncertainty that they are seeing in Q4, they will continue to see very strong growth. And given the fact that they have sold one of the loss-making subsidiaries, margin expansion should also come through for Coforge. If you look at the initial estimates with some of the brokers have put through, people are expecting close to 7% CC growth for Coforge this quarter. So if you juxtapose that with the rest of the pack where, you are either seeing a decline or 1.5% growth, and you have something which will probably grow at 7%, then obviously multiples will start getting re-rated for those things. So I think that is one of the interesting names which should be looked for in the current earnings season.
Okay. All right, Nikhil, we'll wind it up on that note for today. Thank you very much for joining in. Good to get that perspective on the market with you. Thanks for that. Thank you. Well, let's move on to a corporate conversation now, and it's an interesting one. We're putting the spotlight on PVR Inox. The company has been, of course, talking to us about its plans of expanding in the south of India in a big way. It's looking at expanding its base in Telangana, for instance. More screens are coming up over there. Sanjeev Kumar Bijli, who's the executive director at PVR Inox, is joining in to talk about this look south strategy, so to speak, at PVR Inox. Sanjeev, great to have you on. Thank you so much for joining in. So, we've been discussing this over several quarters with Ajay. I remember those conversations where clearly South is emerging as a big market. That's where you're going. You're also trying to keep it asset light with the FOCO model, right? The franchise-owned, company-operated model. So just tell us once again, the numbers, how they're stacking up for South. What justifies the Go South approach? I mean, in the last 1 year, have you seen average occupancies higher in your southern screens? Why are you looking at South India? Is content better? What's driving you there?
No, clearly, I think the occupancies are much higher there. I think people go to the movies a lot more often. The culture to go and entertain yourself at the cinemas is much stronger. So that's why we've been focusing on the South a lot. In Karnataka, Tamil Nadu, Kerala, and also Telangana, we're actually focusing a lot, not just on the main cities, the big cities, but also the smaller cities.
numbers to that effect, Sanjeev? I mean, what would say, average occupancies, I think most quarters that we talk are ranging between the early 20s to mid 20s. But what are occupancies like in the South? And I'm not asking, as of this month per se, the latest numbers or Q4 numbers, just so that we understand the difference.
Average occupancies are hovering around 30%. So that's what it is in all these southern states. And, the number of movies that come out also in South are very prolific. The quality of films is actually getting better and better. So that is what driving the people to the cinemas in South India, and a focus on South India amongst the rest of India as well, of course. But on South India always remains very strong.
So 30% plus occupancy in South versus an average of 23-25% pan-India. That would be correct?
That's right. That's right. Yeah.
So Sanjeev, how many screens do you have in South of India today versus your overall screen count? And how will that change going ahead with this targeted expansion down South?
Well, we have around 1,761 screens now, all India. 40% of that is in the South. And going forward, every year we're adding about 100 screens. This year we've opened about 20 screens so far, and we're going to be opening another 82 screens till the end of the financial year. Out of the 100 screens, again, about 40% will be in South India.
So as a percentage, 40% exposure to South remains, simply put?
Yes.
That number is not going to change?
Absolutely, yeah. There's a lot of potential there. There's a lot of, places where new malls are coming up, new opportunities are coming up for us, and some great developments are coming up. So our focus and our growth strategy in South, of course, remains very robust.
Okay, Sanjeev, so just come in on the CapEx and the funding, because again, the whole approach has been asset light.
Yes.
So as you go about opening these 100 screens, how much money will PVR Inox have to put in? And how much, I don't know how the franchise model works. How much do you need to put in? How much comes in from the franchisee?
Actually, there are two kinds of models that we're pursuing. One is asset light, where about 50% of the capex, up to 50% of the capex is actually contributed by the developer. And then we also have a FOCO model where 100% of the capex is contributed by the developer. So roughly on 100 screens, if our capex without this model, if we were supposed to invest entirely in the fit outs of the cinema, which we used to do, the capex would be anything from 300 to 350 crores. But now it's actually half. It stands at around 175 to 200 crores.
Hi, Sanjeev. Good to see you in. This is Nigel on this side. It's been a while since we spoke.
Hi.
I just want to ask you, what's the margin difference between the two?
The margin difference, when it comes to FOCO, actually is purely on revenue share.
Okay.
But as far as asset light is concerned, asset light is actually also taken on lease, but a very low MG. So we still basically retain the revenues, the total revenues, and do a revenue share with the developer. This is a fairly new model, and we're obviously yet to see the proof as we go along.
Yeah, so what's the profitability though? Profitability difference between the two?
Obviously, the FOCO model will be much higher because it's only purely on revenue share. And as far as, there we have zero investment and purely on revenue share only. But as far as the asset light is concerned, we can expect, a EBITDA margin, depending upon the location also. It's not just one sort of like margin that we're looking at, but anything between 18 to 20% could be the margin.
And you gave us a number as well in terms of the investment that would be required from PVR side. Can you just repeat that number?
As I said, the total investment for 100 screens would take about 300 to 350 crores.
Got it.
Since this is a combination of FOCO and asset light, we'd be looking at 175 to 200 crores.
Got it.
How has this quarter been, Sanjeev, since we have you? We've had a few good movies, which has got people back to the theatres, whether it's Mission Impossible, Sitare Zameen Par. How has Q1 been?
Much better than Q1 last year and much better than Q4 also. I think we'll probably end up clocking about 33.5 million people this quarter. We're very happy with the numbers we've reported. Managed to get a good number of footfalls at a decent ticket price. and a very decent F&B number as well.
And how would this 33.5 million number in terms of footfalls for Q1 just compare with Q1 of last year or Q4, just to get an idea of the improvement?
I think Q1 last year was just about 30 million. So it's
okay. So that's about a 10% increase.
10% increase, yes.
In terms of, you've given us the occupancy level. In terms of what we can expect from the F&B spends, the entertainment side of it, right, which is also simultaneously, I mean, apart from cinema exhibition, that's also something that you've been pushing. What are early trends suggesting for Q1?
Again, much better. The F&B spend is measured by SPH, which is the spend per head. We've gone above on our spend per head from the last quarter. And even the same quarter from previous year. So there seems to be a 10 to 12% increase in spending as well on F&B.
Okay, so F&B spends also going up. Just overall, Sanjeev, leave us with the updated levels in terms of cash and debt. I mean, you've already told us that in this CapEx rollout, your share is only up to about 175 crores.
Yeah.
What is the plan for the rest of the year in terms of any other investments? And just an update on the cash levels and the debt position.
No, I think maximum it'll be about 200 crores towards these new projects, maybe about 50, 60 crores towards renovations and repair and maintenance of the existing circuit, because, there are some properties which are very old now and need some kind of rejuvenation, capex, about 50, 60 crores. So we're obviously keeping an eye on the debt, and we'll be able to pare down our debt further, hopefully by another 200 crores this year.
Okay, all right, Sanjeev, thanks a lot for joining in and giving us your take. There have been a few big hits in the past quarter, and you're sounding confident about things going ahead. But let's cut across to Parikshit, who's in conversation with the Union Telecom Minister, Jyotiraditya Scindia.
With us right now is Union Telecom Minister Jyotiraditya Scindia. Mr. Scindia, thank you so much for joining us here on CNBC TV18. In the last few days, you've also spoken about how the government does not want a duopoly in the telecom sector. Now, when it comes to the revival plans for Vodafone, what is on the government's agenda right now?
So first of all, I would like to correct your statement. I do not think a duopoly is healthy in any sector. And also within telecom, Parikshit, you'll understand that there are multiple verticals. My comment was at the Wi-Fi broadband International Wi-Fi Day. And my comment was in context with any vertical within the telecom sector. Be that as it may, as you have chosen the mobile vertical within the telecom sector, let me say this, that there are very few countries in the world that have 4 players within a particular market. And India happens to be one of those very few outliers in the world which has 4 players in the market. Each one of our players have upwards of 90 million subscribers or 100 million subscribers, be it from BSNL at 91 million subscribers to Jio at 390 million subscribers. So across the whole range. I do believe that the amount of capex that has been put in the telecom sector in India stands out as a paragon across the world. Today, the telecom sector across the world is going through huge amounts of rationalization, and the return on capital employed across the sector in the world the numbers have been dipping very, very quickly. It's only in India that you're seeing a robust return on capital employed, which is why our telcos have deployed almost close to about 4.5 lakh crores, putting in place the 5G network in India. So whether it's the government-owned BSNL or any private sector company, It is for the management in these companies to decide on their strategy and their path to profitability. As far as BSNL is concerned, the department can only give them guidance, vision, strategy inputs. Ultimately, it is the management of that particular company that delivers. And in our case, BSNL has seen a huge turnaround story, one that we are seeing today occurring after 18 years. To answer your question directly, as far as Vodafone is concerned, that is for the management and Vodafone to decide, and not for me as government to decide.
Right. But when it comes to further equity conversion, I think you've said earlier also that it's not as possible.
There cannot be. There possibly cannot be further equity conversion unless the government share gets diluted to lower than 49% to enable us to increase it back to 49%. Because we can't increase it beyond 49%, because the minute you do that, then it becomes a PSU, which is not our intent.
But are there other options being considered?
At this point of time, the equity option, increasing the equity option is not an option. As far as other options are concerned, there's not much discussion happening at this point. If there is, we will let you know.
Analysts have said that 2-year deferment of Vodafone AGR dues is the most possible thing that the government could do.
That is, as I said to you again, that is not for us to decide. That is for the management of the company to decide.
Right. Now, also,
I do not happen to be the CEO of Vodafone, and neither do I happen to be the CEO of BSNL.
Okay. My final question on Vodafone before we move on to other issues. It is also being said that if Vodafone collapses as a going entity, then you'll not be able to recover the dues. Will the government allow that situation to happen?
So I see that you're trying every angle to get an answer from me. I do not answer hypothetical questions.
Okay. Let me also ask you about Bharti Airtel. Now, Bharti Airtel has also applied and made an application to you for equity conversion. The government seems to be considering this. What's your view right now? Has a call been taken?
The Department of Telecommunications is evaluating it. Once they evaluate it and they bring it up to me, then I shall exercise a view based on the analysis that has been done.
Right.
At this point of time, they have not brought it up to me.
Right. But your view, basically whatever you do, whether it's for Bharti or Vodafone, will have to be done on a broad-based basis for everyone. So for the larger health of the sector, what would be your message?
So I will have a view once there is an analysis that has been done within the DoT. Every telecom operator within the ambit of that prescriptive nature of the rule has a right to ask us for conversion of their dues into equity of the company. That's the right that Bharti has exercised. And now that they have submitted their application, it's being examined by the department.
All right. Speaking about satellite...
That being said, it will have to be examined not only by DoT, but it will also have to be examined by Ministry of Finance.
Right. Speaking about satellite communications, the DoT is yet to take approval or yet to approve TRAI's recommendations on spectrum for satellite communications. By when do we expect?
So TRAI has submitted their recommendations to us only in early May. And the DoT is now examining those recommendations. And we are in dialogue with TRAI. It's important for DoT and TRAI to have that conversation and that dialogue. Normally, the process on a reference does take a couple of months. Hopefully, in a couple of months, that should be through.
That should be through. Some industry bodies have also raised concern about the pricing of spectrum for satellite communication companies. How would you respond to those concerns?
Concerns with regard to what?
Or low pricing.
Well, please remember that I am quite confident that TRAI has taken into account, and they've had multiple stakeholder meetings. You cannot price spectrum in the same manner for satellite as you do for telecom, for mobile. And the reason for that is very clear. Satellite spectrum is a shared asset. And therefore, a shared asset spectrum cannot be priced in the same manner as a dedicated spectrum. The laws of physics combined with the laws of economics are very clear on that principle. Ultimately, it is TRAI, because that is the regulatory body that decides the pricing of spectrum, which is mandated, and they have taken into account everyone's considerations, and they'll come out with a ruling on that.
Right. Speaking about Starlink, you've met representatives of Starlink over the last few months. They've got one approval from the government. InSpace is waiting for them to respond to their draft, and they may give an approval soon. But finally, how long would it take to clear the decks for them to operate in India?
Well, I think that the process is on. They have to get permission for their satellite Earth gateways to be located in India. They've got to get in-space permission. They've got to get security clearance. And then they have to get spectrum. These are the major 4 milestones, if you will, to be able to operate in India. I am of the opinion that the sooner my SATCOM companies operate, and by that reference I mean not only Starlink, whether it's OneWeb or it is Reliance Jio, I'd like them to offer services as soon as possible in as many areas as possible, so that there is a fair degree of competition for those that are not connected. And I see that happening, as I said, in the next couple of months. This process should get ironed out.
So by the end of this year, it should be well on track?
Hopefully, but that depends. Please understand that depends on each one of these companies as well, because the quicker they respond to issues with different regulatory authorities, the quicker the permission will be given. It's not something that's dependent on government alone.
Right. Is that the reason why the Tech Adoption Fund, which was launched by InSpace recently, that becomes all the more important?
Absolutely. TDDF is very important for us from a satellite perspective, from a 6G perspective, from an AI perspective, from an IoT perspective. And version 1.0 has already financed almost about 100 or greater proposals, over about 200 crores. We've also got multiple other proposals that we've looked at. And so therefore the Technology Development Fund is a very important piece of that puzzle.
Right. Speaking about the MTNL default and a possible relief package, MTNL has defaulted on loans to the tune of over 8,000 crores. We believe the Cabinet Secretary also took a meeting recently to look at various options to revive it. What's the path to revival?
No, there's no question of path of revival, because as of 1st January 2025, all operations of MTNL have been transferred to BSNL. So BSNL is now the operator for MTNL's customers. So what there is in MTNL is the bank debt and the government equity. So the bank debt needs to be renegotiated with the banks. The process is being done by the Ministry of Finance. And then there are assets within the MTNL balance sheet which need to be divested. And once that is done, then pari passu, a squaring up exercise will happen.
Right. I would also like to ask you about BSNL. Now, you've been focusing on BSNL's growth and profitability. What would be your outlook on the financial health of BSNL going forward?
So that's a good question, Parikshit. After 18 years, we've been able to turn BSNL around. And I think that is a huge move in itself. And let me give you a little bit of a picture of what we've been able to achieve over the last calendar year, the last 12 months. We have increased revenue from financial year 23-24 to 24-25 by roughly about 8%, from roughly about 20,000 crores to about 21,900 crores. Our EBITDA numbers have been extremely promising and extremely healthy. from an EBITDA of close to 2,146 crores in FY 23-24. Our EBITDA this fiscal FY 24-25, historical earnings, has grown to 5,395 crores. So there's been a 150% increase in operating profit.
Welcome back. A few minutes to go. The Nifty has climbed well above 25,400 in the dying minute. In fact, closer to 25,450, but still down, nursing a cut of about 100 points. Sudeep is now joining in. Sudeep, wanted to get your thoughts on two stocks, if you've looked at it. One of them is Gabriel Industries, which has had a one-way up move. And the other one is Dreamfolks, where there is negative news and the stock has gotten beaten down.
I think, Gabriel, the verdict of the market is very clear, and I completely agree with it. I think it's a very good thing for the Anand Group to have consolidated all their automobile-related operations, auto component operations in Gabriel. This is a fantastic step from Gabriel India standalone point of view as well. I think it was a one product company with 90% of revenue coming from single product. The diversification was a need of the hour, and they achieved it through, without going out and acquiring external businesses or trying to set up greenfield. The group companies which were in multiple other verticals got consolidated. So the diversification of product objective got achieved in a seamless manner, in a very, very peaceful manner, I would say. The opportunity, of course, in the auto component space is significant, and Gabriel is a well-known player. I think it's a win-win for the promoters as well as the minority shareholders. And from a business point of view, also, I think it's a good exercise to have been carried out by the group. So yes, Gabriel India definitely, and the market is giving a thumbs up already in a big way. I think price started moving even before the announcement, and the pace has only increased post the announcement. As far as Dreamfolks is concerned, of course, it's a very unfortunate development, and there are a lot of uncertainty. I heard the interaction which you guys had with the management today earlier. Of course, they're trying to put up a brave face, and of course they're trying, but I think there are a lot of uncertainties. Future business, international business, one doesn't know what's going to happen. Those are in the realm of future. As things stand today, it's in a crisis mode, and we have to be very, very careful. I won't definitely recommend anybody buying. Price have corrected significantly, but still, it's not the time to buy Dreamfolks.
All right, Sudeep, request you to stay with us for the time being. I think we'll wind down the markets. And then, in fact, we'll get back to a chat on stocks. But the markets go home with a cut-off around 100 points. The good news is we came off considerably from the low point of the day. So we were off close to around 60 points from the day's low. What didn't do well? Some of these financials came in for selling. So you had Shriram Finance, HDFC Life, IndusInd Bank, Bajaj Finance as well. All of them down between 2 to around 3% in today's trading session. What did well? Metals. There is hope that, in fact, China will do something with regard to stimulus. Hopefully, China doesn't produce as much as well, which in fact will support pricing. And there is a glimmer of hope that President Trump will be more rational, sign some deals that will remove some kind of uncertainty with regard to demand. So explain that one was higher. Asian Paints, that's had a good run actually. Talk about a stock that's been an underperformer for the last 3 years. Well, today it was one of the top gainers, up 2.5%. What else was moving around in trade today? RBL Bank, there was some news, media reports that suggested there could be a deal. The street looks like they've sold into the stock, because after seeing a big run from around 170 rupees to around 260 rupees, the stock actually goes home at the low point of the day. Hutco as well was down close to around 3.5%. NCC goes home with a bit of a cut. What else did well? You had Tata Communications, spurred up by a nice brokerage note out there. Mankind, that goes home with a gain of around 4.5%. And ABFRL as well, solid gains out there. From the broader markets, you had SAIL that participated on the upside, and Dixon Technologies, it seems to be one downtick and then two upticks, because the stock has recovered all the losses that we've seen in the last few days. Stock now holding above that 15,000 rupee mark. The good news today was the mid-cap index did a relative outperformance, ending with a mild cut of around 0.1%. However, the number of stocks that were advancing were lower than the number of stocks that were declining. Well, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Markets Forward comes up next.